Assalamualaikum warahmatullahi wabarakatuh. My name is Hayyin Nisriaini, and now I'm currently a student of International Program of Accounting in Muhammadiyah University of Yogyakarta. And now I'm currently doing a presentation assignment of public sector accounting. The topic is about financial accounting of public sector organization and the role of information technology and human resources. As you know, financial accounting system can be distinguished based on what is the object of recording, when the transactions are recorded, and how transactions are recorded. First one, I would like to tell you about financial accounting system based on listing object. The object of recording financial accounting is a transaction or event. There are several alternative of accounting system. The first one is budgetary accounting, the second one is fund accounting, and the third one is accounting for commitment. I will tell you about budgetary accounting. Budgetary accounting divided into three. The first one is at the time of budget approval for the fiscal year. The second one is at the time of budget allocation for a particular quarter, and the third one is at the time of notification and realization. Time of budget approval for the fiscal year. There is the journal. The journal on the income side or on the shopping side. For the income side, I will show you the journal. The journal is estimated income in the debit and surplus or deficit on the credit. And for on the shopping side, the surplus or deficit on the debit and shopping appropriation on the credit. At the time of notification and realization, I will show you the journal. The journal on the income side is allocation of revenue estimate in the debit and revenue bills in the credit. And at the time of receipt of income, for the debit is cash, and for the credit is income. And at the time of budget allocation for a particular quarter, I will show you the journal. The first one is estimated revenue allocated in the debit and allocated of estimated revenue on the credit. And for the on shopping side, allocation of shopping appropriation on the debit and allowance shopping on the at the time of notification. There is two other journal on the shopping side. The first one is pre-encumbrance of goods and service on the credit, and allocation of shipping appreciation on the credit, goods or service encumbrance on the debit, and pre-encumbrance of goods or service in the credit. And when the good of service are received on the debit is shop of good or service, and the credit. I will explain to you about fund accounting. Accounting for fund is an accounting system that limit fund for a purpose, and purpose certain entities are divided into entities of other entities based on the intent and purpose of a fund. Basically, the type of entity in fund accounting consists of two types. The first one is single accounting entity, and the second one is multiply accounting. And for single accounting entity, this entity is used by profit-seeking enterprise or company that are profit-oriented. The fund used in this type entity are non-expendable property fund, which are funds used to account for income, cost, asset, debt, and capital from an organization activity. And for multiply activity, this entity is used by public sector organization. Fund used in entity types this is an expendable fund, which is the fund used to account current asset related to debt, change in net asset, and balance spent on various non-business. Next is accounting for commitment. A commitment accounting system is an accounting system that is used as the basis for taking operational management decision or commitment. The commitment accounting system is used for controlling the organization budget. As a result of commitment accounting system, commitment accounting is often implemented as a subsystem. And there is two types of commitment. The first one is bill commitment. Bill commitment is meant which is a commitment that will be received by a bank from another party. And the second one is liability commitment, which is a commitment given by a bank to customer or other. So the difference is in the giving and receive. For the bill commitment means that bank receive the commitment from the other party. But meanwhile, the liability commitment, the commitment given by bank to the customer on the other. Next, I will explain to you about financial accounting system based on when listing is done. In general, public sector accounting use the cash basis in the accounting recording mechanism. And this is due to the strong influence of the budget, which is the main information need of users of public sector organization financial statement. Next is I will tell you the difference of cash-based accounting and trend in using the accrual basis. For cash-based accounting, basically the application of accounting in the cash basis environment is primarily to produce reliable and complete information on aspect of cash transaction, cash saving, and short-term debt position from the budget of public sector organization. Cash-based accounting has relatively simple characteristic and it's easy to administer. And for the accrual basis, cash basis and accrual basis are the two endpoint of spectrum of accounting based and possible budget, and it is accepted for financial reporting than for budgeting purpose. So I will explain the difference between the accrual basis and cash basis. For the cash basis, it is more easier because in the accrual basis they show the detail of financial reporting. Meanwhile, for cash basis is just for budgeting purpose. For example, is you add the cash directly and out the cash. And for the accrual basis, it is more become trend in different country. So many country using the accrual basis. So accrual basis actually more detail, but it is have a high risk. Then the next I will explain about purpose and benefit of accrual basis. In general, the accrual basis has been applied in countries that have previously carried out public management reforms. The key objective is to hold manager accountable from the output and outcome, and at the same time relax control and input. For the financial position in accrual basis, accrual accounting is needed by the organization to maintain complete record of asset and debt, thus facilitating better asset management, including maintenance, asset replacement policies, excessive asset identification and reduction. And also, accrual accounting is provide information on opinion and expense, including the effect of transaction whose cash has not been received or paid. The risk of implementing cash-based accountability can be anticipated with the use of accrual-based accounting account with the following rules. The first one is recording of economic transaction is carried out at the time of occurrence, both related to non-cash and related to cash received and payment. The last one is financial accounting system based on how records are carried out. There is three types. The first one is single entry bookkeeping. The second one is double entry bookkeeping, and the third one is triple entry bookkeeping. Single entry bookkeeping. Single entry refers to the method of managing account about in a simple way that does not follow the principle of double entry system. Under the system only use a minimum account, which is considered important cash book and personal account of the debtor and creditor held. And there is the special feature of single entry system. The first one is not suitable for a large operational activity, and the second one is incomplete account, the third one is variation, and the last is flexible. For the double entry bookkeeping, the presence of accounting record with the double entry method provide the concept of understanding that each transaction must be recorded with period record. And for the triple entry bookkeeping, namely the transaction recording system using double entry to generate accrual-based financial statement, and at the time also recorded to produce cash-based budget realization report. Triple entry bookkeeping recording is strongly influenced by the use of the cash basis in the budget realization report, which is the main report needed by the user of public sector organization financial statement. And the last material is about the role of information technology and human resource. The information technology is defined as a technology used to manage data, including processing, obtaining, compiling, storing, and manipulating data in various ways to produce quality information, namely relevant, accurate, and timely information, which is used for personal, business, and government, and it is strategic information for decision. Enough our presentation. Hopefully our presentation will help you to learn about public sector accounting. Thank you very much for your attention. Wassalamualaikum warahmatullahi wabarakatuh.